Right. Thank you very much for this opportunity to provide a brief overview of the Ghanaian economy to investors. Over the past few years, since the new government took power in 2017, the government has put into place a very strong policy framework that's been able to help deliver some macroeconomic stability and growth. The key ingredients in the framework include strong revenue measures to help improve revenue to the budget, expenditure rationalization, and reprofiling of debt. This is the fiscal policy leg of the macroeconomic framework that was put into place. In addition to that, on the monetary policy side, we had put into place policies to help anchor inflation expectations, as well as also anchor exchange rate expectations. And therefore, we had adjusted the policy rates consistent with the direction of inflation, which we had managed to bring down from over 15% to nearly 7% at the end of the three-year period. So you would see that between the period 2017 and 2020, Ghana had made significant progress in restoring macroeconomic stability and growth. Not only the policy focus on the macro, we also focused on the financial sector, where the government had inherited a financial sector which was in a complete disarray, with many insolvent institutions, high non-performing loans, institutions that were weak and were relying on the central bank for liquidity support. We quickly went to work to rid the sector of all these weak institutions and resolved them, essentially revoking the licenses of as many as 9 banks, 23 savings and loan institutions, as well as over 340 microfinance institutions. We also recapitalized the financial institutions, raising the minimum capital requirement for banks, because prior to the government's intervention, higher inflation, higher exchange rate depreciation had led to the banks more or less getting their capital eroded through higher NPLs and a very unstable macro environment. So the whole financial sector was reviewed. And by the end of 2019, we had reduced the number of banks. The banks were more solid, well capitalized, had become more liquid. They were not depending on the central bank for liquidity support. And they had very strong buffers. At the same time, on the external side, Ghana had become a stronger exporter of oil. And therefore, we saw the trade balance switch from a trade deficit in 2016 to a surplus in 2017, 2018. Now, the strong export performance, as well as improved confidence in the Ghanaian economy, which also helped to bring in additional capital. We experienced higher capital inflows, allowed the central bank to also build reserves over the past 3 years. So by the end of 2019, the fiscal deficit had been reduced to nearly 5%. Inflation had come down from over 15% to 7%. The reserve cover for the balance of payments had increased significantly to nearly 4 months of import cover from less than 2.5 months of import cover. And we had begun to see real sector performing more strongly than the 3% that was recorded prior to that. And then we had the COVID-19 event coming in the first quarter of 2020, which has brought a few more challenges into managing the economy. Essentially, the government had to take very strong measures to save lives and livelihoods as a result of the pandemic. And this led to additional fiscal spending for the year 2020 and led to a rather high budget deficit of nearly 11% by the end of 2020. So this year, 2021, the idea is to try to revert back to the path of consolidation. And we have already beginning to see signs of a rebound in the economy. Inflation, which went slightly up in 2020 because of the COVID-19, has since gone back into single digits. The currency has been fairly stable in 2021. And the results of our half-year fiscal results for 2021 shows that the fiscal balance is on target to end the year at 9.5%, which is the target set for this year, consistent with the medium-term target of 5% by 2023. The trade balance continues to record a surplus as of half year 2021, and we also have been able to maintain a relatively strong reserve position by the middle of the year. So this is where we are. The real sector data that we have had for the first half of this year suggests a strong pickup in growth. The drivers of growth being the agricultural sector and the services sector. Agricultural growth being driven mainly by livestock crops. And in the services sector, we are seeing the main driver of growth being the information, communications, and technology subsectors. In the external sector, we have seen improvements in commodity prices, the main commodity prices for Ghana being crude oil prices, gold prices, and cocoa prices. And therefore, this has helped. The improvement in the oil prices has helped to raise export performance this year. We have seen the total exports increase as of half year to around 7.6 billion. Total imports are also increasing half year by 5.7% to 6.8 billion, reflecting the recovery in the economy. Even though the trade surplus is at 800 million, 200 million short of the same period last year, the trade balance still remains in a surplus. Now, in terms of the impact of the COVID, Ghana recorded about 103,019 cases at the middle of July 2021, out of which 97,213 recoveries have occurred. We have over 405,000 fully vaccinated Ghanaians, and relatively to our peers, Ghana seems to have managed the coronavirus impact relatively strong. So the story so far, it's a good one showing that a lot of the projects that the government committed to implementing, including infrastructure projects, have been completed. The key strategic factories to provide jobs and accelerate the industrialization agenda have been operationalized. Ghana has recently been removed from the Financial Action Task Force gray list, and the Ministry of Finance has signed compact agreements with the various ministers to deliver on the Ghana Cares program. In terms of the consolidation efforts, as I said earlier on, we are continuing to implement prudent macro fiscal policies, and we continue to remain on track in terms of fiscal stability. We were able to this year issue a foreign currency denominated bond with a zero coupon, and the energy sector has been revamped. Of particular interest is the issue of the robustness of revenue to support the fiscal consolidation effort. And the government has focused on measures that would help to improve domestic resource mobilization. Some of the measures includes the completion of the national identification numbers identification for citizens of Ghana, which has been adopted as a tax identification number for individuals, the implementation of government's cashless policy, the Ghana.gov, which allows the online payment of revenue and taxes, the launching of an online filing application form, Christian Tax Made Digital, a successful implementation of a paperless court system since 2018, and then the launch of the ICONs in 2020 to facilitate coordination of all court activities. The government has also introduced a revenue assurance and compliance and enforcement initiative also to help support the revenue mobilization drive, as well as the implementation in this year's budget of the COVID-19 health levy and the sanitation and pollution levy from May 2021. The government is also looking at the revamp of the exemptions bill, which has been presented to Parliament, and it is the expectation that the issue of the implementation of property taxes will take off, hopefully by the end of the year. There is also currently ongoing a tax audit digitalization drive, which is to more or less lead to effective and efficient tax audits, as well as voluntary tax compliance by taxpayers. So there has been quite a number of measures that have been put into place, which we hope would help improve the revenue flows to the budget. On the monetary policy side, if you have been following the Ghanaian situation, we have lowered the policy rate to 13.5% to reflect the improvements in inflation rate that we have seen. Because of the pandemic, we also had to introduce policy measures to help support the financial system in dealing with the pandemic. As I keep on saying, that the shock that we got from the COVID-19 pandemic could have derailed the economy had it not been for the policy measures that we had taken over the last 3 years, which had provided the Ghanaian economy with adequate buffers and created a policy space which allowed us to be in a position to reduce both the policy rates as well as allow the banks to be able to continue to lend to the private sector. Some of the regulatory reliefs that we put into place, especially the liquidity and capital reliefs, have contributed significantly to sustain growth in advances by the banks, even though there were some issues about loan repayments. We also gave guidelines on restructuring and moratorium for the sectors that were worst hit by the pandemic. As I said, the current account deficit for half year 2021, which has been estimated at 926.1 million, is slightly larger than that of a year ago, partly because of the lower trade surplus and higher investment net outflows for 2021. However, remittance inflows have continued to remain resilient, with net flows of about 1.6 billion for the first half of this year, despite the uncertain global improvement. At the end of the first half of this year, our gross reserves stood at $11 billion, providing cover for 5 months of imports, And the exchange rate has remained relatively stable, depreciating by less than 1% by the first half of this year. So I think that one can draw the conclusion that the economy's recovery is on track. The fiscal policy remains on track to the medium-term target of 5% and the 2021 target of 9.5%. Our anti-inflation policies are working. Inflation continues to be anchored within our single-digit band. The balance of payment situation continues to be fairly robust, which has allowed us to build reserves to provide 5 months of import cover. Ghana is one of the African countries that will be benefiting from the IMF's SDR allocation of about $1 billion, which we got barely a month ago. And all of that should help provide us with additional buffers to keep our currency relatively stable over the next year or so. So we think that this is an economy that will continue to show strong growth, although the risks remain in terms of our ability to sustain the progress that have been made with the COVID vaccines. We expect inflation to continue to remain within our target bands, even though we have had some base drift effects due to some of the recent tax adjustments and petroleum price adjustments. But the government is committed to continue to implement prudent macro policies. The government is still interested in ensuring debt sustainability, as well as financial stability to support the recovery. And we very much implore you to continue to have confidence that you have demonstrated to the Ghanaian economy over the past 4 years or so. On this note, I thank you all very much, and I wish you a successful conference. Thank you.